Yo, what's going on, everybody? Happy Monday. It's October 3rd. US markets are open. And so it's about 8:30 a.m. my time. We could see the futures overnight started to press up right back into that June low, that level we've been watching for the last, maybe week or two. Remember, just this Friday, we had smashed through that June low quite decisively, and we put in a local low of about 35.71 here on the S&P 500 futures. If we go to the SPX, which is the actual market index, okay, here's how the daily looks, right? Daily on Friday, it closed like this. Here's that June low that we can see right there around 36.36. As we open here, the new Monday session, you can see we kind of popped up on the day in the morning, and then now we're kind of selling off, right? However, the one thing I'll say around this particular area is that if we start climbing back above the June low again, decent chance that we go back to 37.50, okay, because this is a pretty key SR level in my opinion. But it doesn't mean that, from here we can't break down. It just means that if you reclaim June low, decently high chance that you go back to 37.50. Now, I want to show you guys one more thing, okay? First of all, on a weekly basis, right? Last week, obviously, did not close that well in the S&P 500. And here's how the quarterly looked, okay? Here's the quarterly close that we had just this past Friday, okay? That is not a good-looking quarterly close. However, as we head into this new quarter, remember that it is entirely possible that we squeeze up maybe to the quarterly open, which is around 37.81, and then start selling off thereafter. We may even push up, say, 3,700 even, and then start selling off. And this is almost sort of reminiscent of what happened back here in the 08-09 financial crisis of these, quarterly candles, just the way they, very effectively broke down. It almost looks similar to what happened back here. Okay, so I'm just kind of paying attention to these two analogs of how price action looked from the 08-09 financial crisis versus now. Now, personally, they're two completely different events. 08-09 crisis was predicated upon the financial sector being heavily levered. But this time around, it's not that different, but there are many other factors such as inflation, rising interest rates, supply chain issues, Russia-Ukraine war, et cetera, right? I don't have to rehash that. So how does that relate to, things regarding crypto? Well, crypto prices right now, headed into a new quarter, they're kind of flat, nothing too negative, nothing too positive. They're doing okay. Stock market is just getting populated right now, so we'll see how that pans out. But for the most part, right, like, the stock market is opening up relatively flat and decently positive in certain areas, certain sectors this morning. But crypto, the way it closed out this past month was quite unique, okay? So here's the quarterly close on BTC, right? That was the quarterly close right there. Now, as I spoke about in yesterday's video to Advantage members, again, Advantage members have access to all the videos that I post, twice a day, every day. All you have to do is go in the Advantage announcements channel right here if you're new, and you can look through, all these different videos that we have that we post, every day or twice a day sometimes. And so, right now, right, what I covered in yesterday night's video was that this is how the quarterly close. Quarterly closing like this is more negative than positive, but it's not completely like bearish and negative, okay? Because what I mean by that is, first of all, it was an inside bar candle, meaning the low of this quarter actually did not take out the low of this previous quarter. Not only that, if you look at the candle body as well as the overall structure itself, there's a pretty decently high wick to the top, a smaller wick to the bottom side, and the candle body itself closed pretty close to where it opened. So the open was right there around, say, close to 20,000. Let me show this to you guys one more time. This was the open. Okay, so that was 19,900. And the close was right there, 19,400. So it was like $500 off. Okay, so not too terrible. But that doesn't mean that, I'm looking at the market and saying, well, from here, we have to go up. It just means that it's quite surprising to me that this is how the quarterly closed here in BTC, and this is how the quarterly closed in the S&P 500. Now, I'll be honest and say, I don't see a world where if we start seeing stocks sell off, especially with, larger magnitude in the coming days, coming weeks ahead, I don't see a way in the world where crypto does not sell off, to the same magnitude, if not higher. Okay. Once stocks start selling off at sort of, these multi-sigma moves where you start seeing that, it's a 2, 3, 5% drop in a day in the indices. Individual stocks are getting hammered. Pretty sure all hell will break loose for crypto itself. And the level that I would be looking for in terms of BTC here, I've already mapped this out before, right? On a weekly basis, this is kind of how I look at it. Okay, I'd say, well, if you look at previous all-time high, which is right here, around 20,000 or so, we're currently rejecting that previous all-time high. Again, on a weekly basis, right? We printed this sort of inverted hammer style candle. So it's like, somewhat neutral, but nonetheless, we've spent so much time historically under the 200 weekly EMAs or as well as MAs right here, that we've never done that before, not even in 2015, not in 2018 or 19, not here in 2020 when we had that COVID crash, right? So this is definitely something new and unique. And so if we're supposed to break down further, say the stock market breaks down further and drags crypto down with it, well, then to the bottom side, the tap is, somewhere alongside this trend line, which is probably, say we drop like in the next, 2 to 3 weeks, right? That's somewhere around 14,000. Maybe we drop a little bit deeper, right? Maybe we drop to this $12,000 level. Why is that $12,000 level important? Well, if you look back all the way in 2018 right there, 2019 right there, in 2020, this was a key resistance point on the way up before we started that new bull run in this November and December 2020 all the way to 2021. That was the bull run defining moment right there with this big bullish candle. Okay, so to retap that on the bottom side would be around $12,000. Okay, so those are the levels that I'd be paying attention to on the bottom side. All right, now, I'm short a couple things, as I've mentioned to Advantage members here in the altcoin leverage short channel. And I also posted some stuff in the altcoin analysis channel. So make sure you guys check it out. But, if you were looking at the market and you were saying, well, I want to get short in the market because I believe that the market is going to break down, right? Well, the best way to express a short bearish view is number one, BTC, because it's the most liquid crypto asset that is recognized by institutions. Okay, so if you believe that crypto is going to break down, well, then Bitcoin is the best way to express that view from the equity standpoint, right? If you believe that, let's just say BTC may break down but not as hard, well then Ethereum is a better expressed view because Ethereum already has the merge behind it. The merge happened back here. And guess what? Since then, we kind of just, sold off, right? So Ethereum is the second most largest market cap asset, but it's not as liquid, not as recognized by bigger funds and institutions. Ethereum can easily go down 50 to 70% from here. Okay, so for example, let me go on the weekly chart of Ethereum and show you guys how that looks, right? Here's a Ethereum uptrend structure right here, going back to 2018, 2019, 2020. Okay, similar to what I just showed you on BTC on the weekly chart. So if Ethereum breaks down from here, Ethereum can go down almost 70% over the next few weeks and meet this ascending trend line. Again, I'm not trying to be a perma bear. I'm just trying to explain to you that structurally, if you look at this uptrend line as a form of support, or from the standpoint of what was the key resistance point for ETH all the way back in 2016, 17, 18, and 20. Here's that level right there, similar to what I showed you on BTC earlier, right? So that level is somewhere around $400, $400, $400, and again, retested right there around $350, $400, right? So coming back to that level from 1,300 is a 73 to 74% drop from where we are. Okay, so if we stretch this out, well, then that's where price may come to meet us. Again, it may not happen this week. It may not even happen next week. It may not even happen this quarter. I don't know. But this is the level that you may want to be watching carefully. Right now, again, all this is dependent on the macro picture, because guess what? Macro has been guiding our markets for the last several months, actually pretty much the entire year, right? So the one thing that came up in macro this past week or this weekend was Credit Suisse having a potential default insolvency issue. I don't know how true that is. Again, you may want to look that up by yourself, but if you just type in and Google Credit Suisse news, right, you'll see a ton of articles about Credit Suisse effectively having a ton of liabilities, ton of leverage on their books. It's almost like they call it like the Lehman Brothers moment, what happened in 2008, 2009 financial crisis. And that kind of brought down, parts of the financial economy here in the United States. Credit Suisse is more based in Europe. Of course, they have, assets from America and Asia as well. But the point is that Credit Suisse could be going through similar troubles. Maybe Deutsche Bank could be going through similar troubles as well, right? So these are the things that, and as you can see, Credit Suisse is trending right now. Okay, so these are the things that are coming up from a fundamental catalyst level of shit that could hit the fan that could bring down markets headed into this new quarter. Okay, so as we look at these concerns, we want to be careful of what could potentially go wrong in this sort of systemic view that we're looking at from the macro picture, right? The other thing that happened this past week was, if you look at Apple stock, okay, past week, Apple stock just got completely hammered, to the downside. Apple is also very, very close to its respective June lows right there. It's about like 4 or 5% off from the June lows. Apple talked about demand faltering and not as much demand for their new iPhone. And again, that could be a sign of growth in consumer discretionary spending go down, right? And again, that's ultimately a sign of consumers being a little bit more careful, because they either don't want to spend that kind of money because their money is tied up in inflationary measures, such as trying to pay for groceries or bills, or high interest rates for their loans or their house, right? And so maybe they don't have that kind of spending ability for iPhone, from an Apple iPhone, right? So that's the kind of story that gets told around the circles in finance, that, well, if people are not buying iPhones and people are not traveling as much, and oil prices are high and this and that, maybe inflation is still going to be a persistent issue. If inflation is a persistent issue, then we know that interest rates are still going to continue to be hiked, in which case we know that the markets are going to get spanked, to the downside, because interest rates being hiked continuously means that more and more pressure, more and more weight on tech stocks, on crypto stocks that are sort of forward-looking assets that look into the future to generate revenue, to generate profit. Okay, and so if money is effectively becoming expensive today and possibly tomorrow or next quarter, then these assets like crypto, like stocks, are trying to factor that in and see how much is money going to be expensive in the next few quarters. Is demand going to diminish significantly in the next few quarters because of higher interest rates, higher inflation? And if so, the stocks valuation, crypto valuation, crypto activity, all that stuff gets dialed back. You see, that's really why these markets break down. It's not simply because the Fed is raising interest rates. It is because of subsequent events that happen after the interest rates are raised. Okay, so I just want to talk about BTC right here, right? As you can see, we're currently inside the monthly open. I personally believe that we're going to tag that monthly open quite possibly tag all the way up here around 19,550. And then if we start breaking back inside the monthly open, I think that could be your short position right there. Or if you want to be a little bit aggressive right there above 1950, you could short. You could keep your stop above September open or above this red candle right there if you want to have an aggressive deep stop. Okay. Now, again, as I've talked about before, if you want to express another point of view for just being short in crypto, well, then Ethereum is it, in my opinion. This is a pretty clear descending, triangle style pattern. More often than not, if the trend is already down like this, these triangles have a higher probability of breaking down. On top of that, I see a mini head and shoulders here being printed. If that starts breaking down, again, another possibility for a short opportunity, right? And the target for that short opportunity is very simple. I think it's $1,000. Like that's the biggest bold level that I could see price come back into, because it's like the most, visible level for Ethereum, over here, where you could kind of see multiple KSR points tested here as support back here in June and July before the prices, ripped up. So $1,000 is probably my next big guess where Ethereum could jump back down to, if you do want to target profit level on the way down, that is. Okay. The other expressive view is maybe you're just short Solana because you don't see any interest in some of these newer L1s that popped up. You feel like user activity, user demand, money flows, etc., all that stuff is going down because you believe that the market is overall still in a bear market. Economies are in a recession, inflation is a big thing. You can make up 50 different excuses for why crypto is going to go down. And technically, all those excuses are going to be right. But the market also only needs one excuse for it to go up. It could be as simple as, Russia and Ukraine strike a deal, or Russia strikes a deal with the West. And maybe that just, randomly spikes up markets. It may not directly solve the interest rate or inflation issue, but it could be seen as an issue to be resolved in the next quarter or two ahead. And then the markets will start repricing that in, very, very fast, right? So you could see that as one single argument for why the market could go up, okay? The other argument could be that maybe markets are oversold. Maybe crypto is oversold. Maybe it just ranges, right? Maybe the high point of the range is $47.50. The low point of the range is here, 32. So maybe we go back to range high and keep ranging headed into, the rest of October and November and December. Okay. If we do decide to break down, in my opinion, I would probably figure, number one, there will be some sort of news catalyst, or number two, it will likely be led by the stock market side, right? Like, I don't think so far we know very well that the crypto correlation to the stock market has been extremely tight. And it's no surprise that if we start seeing stock market weakness, we start seeing, the VIX start to pop up, it's going to ultimately drag crypto down, pretty hard with it, right? And so the next level that I would probably see for the stock market, if we were to break down further, let me go back here. If we were to break down further, I would probably see the stock market, come back somewhere down here. Okay, probably be like somewhere down here on the lower end of 34 to 3,500 points. So that'd be like, 100 to 150 point drop from where we are. So let's just say that's, 4 to 5% drop. And if that happens, then, I'm kind of expecting BTC to take out this June low. But again, that doesn't mean that, from here we dump lower. We could, but it could be like a fast wick, quick recovery, which again, you want to be paying attention to. If you see a wick down here and price is not able to, stay down here and it starts climbing back up, that's probably a sign to consider closing out shorts or getting long. Okay, again, non-investment advice, but that would be something that I would be considering if we're not able to break and sustain, lower prices from here. If we do wick, quickly recover, I'm probably gonna, start getting long in the market. Okay. And then same goes with, Solana or Ethereum or some of these other assets, right? I would say Solana, maybe it wicks into 29 or 30 bucks. And from here, maybe it climbs back to $50, goes back to range high. Like it could be as simple as that. Okay. So pay attention to these ranges that I've mapped out, the levels that are on the chart, whether you're a moving average user or you like to map out, the monthly opens like I do. These are things that you want to be paying attention to. Okay. Let's map out the new weekly open because I have not done that yet. New weekly open is right there. So it is October 2nd. All right, visibility, we'll change that, and leave that right there. Okay, so let's go back and see where we are. So we're above the weekly open, as you can see right there, but we're below the monthly open. So right now we're trapped between these two little areas. Like I said before, I think chances are pretty high that we get a squeeze like this and then maybe return back down. If we get a squeeze like this and we're finding support above monthly open and you see something like this, and you start seeing, let me see, where is that? If you start seeing the S&P 500 maintain above the June low or the September low like that, at the same time you see BTC doing some stuff like this, I think prices are going to squeeze higher. BTC might get back to 20,000, maybe gets all the way high as 20,700. But just letting y'all know that, the squeeze possibility of BTC almost always is very high because Bitcoin loves to trap people, thinking it's going to break down and it quickly shoots back up, takes out a bunch of stops, and then, rolls over again. It did that right here. It did that right here. Okay. So pay attention to those scenarios. All right. From a pivot standpoint, you can kind of see we're banging right into this weekly pivot right now. Let me turn this off. As you can see, that's the weekly pivot. It's about $19,300 on the daily pivot right here. That pivot is around 20,000 flat. So, hey, maybe we bang right up into that $20,000 level as a pivot. I don't think we'll get that high. Personally, I think we might just squeeze up above the October monthly open. Maybe we get to like 19.6 or something, and then we roll over. So like this, roll over, right? That's my ideal, situation and scenario. And in which case, I could kind of see the stock market doing some crap like this, tags the low, rolls over, and we start breaking down, headed into this week or next week. Okay. Now, again, I'm mapping out both sides of the scenario because I'm really not sure this triple bottom style movement right here. More often than not, every time I've seen this, you often get that the third low tends to take out all the highs that were left behind over, the first low and a second low. Okay. So I'd be paying attention to, maybe 3750 all the way up to 3,800 points or something, just in case this thing just does squeeze up aggressively. Now, again, that could be changed by the simple fact of what we spoke about earlier. Maybe Credit Suisse is really blowing up and shit's about to really hit the fan. Maybe, there's something else happening on the macro standpoint. Like maybe Putin starts talking about nuclear war. I mean, literally like anything could just shake markets right now because the markets are already very fragile, pretty much on the edge, right? They're like looking for any reason to sell off. They're not looking for any reason to go up because the pile of crap that we have on our plate for the reasons to go down is significantly higher than significantly lower than the pile of crap that we have. I'm sorry. Let me rewind. The number of reasons for us to go down is many, right? And they're piling up by the week, by the month. The number of reasons for us to go up are very far and few. And even if they are far and few, they are very temporary because you just have so many reasons and so much hedging, so much caution, so much fear in the markets of all the things that could go wrong where people do not want to take that kind of risk. And also, you're so close to the end of the year, right? People are probably looking at their portfolios saying, man, Like I am really, really beat up this year. Do I want to put my money, more of my money in the market and get beat up more by the end of the year? Do I take my losses as they are now and we'll let the year just like coast out and we'll see what happens, early next year, right? So you can see the arguments for both sides really in that sense, okay? All right. Talk about ETH levels, right? Here's a 12-hour important level. I'll show this to you guys one more time of why I find this level particularly important. It's very, very clean level, very clean, okay? If you look at this level going back to July earlier this year, right? Look at how much time we've spent around this 1350 marker, and we've very much struggled around this level, right? I would expect Ethereum to once again do something like this, lower high and then sell off, or maybe it bangs back into 1340, 1350 up here, and then it starts rolling over again. And again, this is dependent on if the crypto market's going to roll down. If we smash above 1350 and we maintain above like this, right? And crypto markets are going up together as well as equity markets are going up, then Ethereum probably goes back to $1,500. Oops. $1,500 quite easily. Until then, I expect Ethereum to get capped by this level right here and for us to continue down towards what I spoke about earlier, which is $1,000 right here. Let me write that down. $1,000. Okay. Sorry, that's an ugly, ugly drawing, but that's what I expect. Okay. All right, everybody. That's all I got for y'all. I think, more analysis to be posted in the Advantage side. The link is below if you do want to join the subscription. It's $97 per month. Or if you want to join the lifetime, it's $1,750. I will be increasing the prices. You could find that lifetime membership right here, official announcements. Come join, right? Come spend time with us for the next bull market that lies ahead of us. I promise you, it will be one of the most amazing experiences. If this past market was your, first bull market, wait till you experience your second or third bull market. Trust me, it will be incredible. All right. Anyway, good luck, everybody. Y'all take care. If you want more analysis, come join our Discord. The link is below. Until then, take care. Cheers, and we'll talk soon.